All right, what is going on, Discord and YouTube family? Welcome back to the Trader Shop, another edition of Market Review with me, T. Hobbs. Today on the channel, we're going to be discussing my pre-market plan for the Nasdaq. I'll also go over the charting that I did on the Dow Jones, the S&P 500, and my thesis being supported by the volatility index and kind of things that I was looking for on the day. I'll discuss some of the trades I took, but you guys can check the post in the YouTube channel for the trades that I actually took. I'm going to start trying to post those trades over there, and then later doing some version of a trade review for you guys as I start to kind of roll out, the new version of the channel. So I'm just taking my time, not trying to put too much pressure on my trading, but also I want to start to spread the information that I'm learning in regards to my journey. So that being said, let's get right into the breakdown of the pre-market plan. Today, my weapon of choice was the Nasdaq. I'm not really a fan of, just stick to one instrument. I do what I want, right? But I stick to 4 different instruments that I primarily trade. That's the S&P 500, the Dow Jones, the Nasdaq, and gold during the Asia session. Yesterday I caught a pretty nice trade on gold, so I didn't really trade the New York session. I was in here in the live in the Discord and everything, but I really didn't trade it. I was just kind of narrating price. I really didn't like where price was at that time, but I did take a really good trade. And again, if you follow me on Twitter, down below you'll see the tag for X. It's at the _trader shop, and I post all my trades over there that I take. I also will, like I said, time to time, I'll post them in the post section of the YouTube channel. Anyway, let's get right into the pre-market plan for the NASDAQ. I like to zoom out anytime I start price action with the Discord every single morning. We go through the price action on the daily candle down just to kind of get an idea of what the market's trying to do, right? Like what is the overall context of the market? Because I think that's important, right? If we look at this, right, we were looking at this on the daily time frame, and I was talking to the Discord. I said, hey, we were in an uptrend, which is a strong uptrend, and I'm looking for us to catch resistance right at this little daily supply zone right here. I think the level was roughly about 19,269. But I also mentioned that we were inside of what is called a daily volume imbalance, like from here, this little gap miss here, and then all the way up to the top of this candle at 19,136 or 141, I think it was what I wrote on the chart. So I said, I don't even have a bullish plan. Like that was literally my words to the Discord. You can check my pre-market plan. I didn't have a bullish plan because my thesis was if the market is going to continue to rally, I will walk away, because the way that we were up here, there was no way I was going to continue. I was looking for continuation. I was looking for shorts and shorts only, right? If I was incorrect, I was willing to accept that fate, right? And then I just would have walked away from the market. But it looks like I was spot on. I did experience a lot of freaking chop. Like I took 4 trades. I took 5 total trades inside of the New York AM session. 4 of them were losers, right? But every single one of them, my risk was managed, right? Like my risk was managed. And then I was able to take a pretty big dynamic trade. And you'll see that kind of either on the thumbnail or in the post section of the YouTube channel. So let's get right into the pre-market plan. Current conditions, we were in the markup phase. So I understood that the market, the strength was with the bulls, right? But we were bullish as long as we stayed above 18,184, right? You can see that was basically the daily fib or the equilibrium of the previous daily candle, okay? We were bearish as long as we stayed below 19,383, which is the high of this range up here, right? Like this is the dealing range that we're dealing with, 19,384 all the way down to roughly 17,718. But the current dealing range was these two, right? Now, between that, though, I knew that the top of this DVI or the daily volume imbalance was 1941,141. And that is why I was looking to trade short inside of this area. Macro, we had a huge gap up. Bulls appear to be very strong. Macro is just kind of my thoughts on the full context of the market, right? The bulls appear to be very strong after bears failed to fill the gap. Look for the strong trend to continue and only look to short at key levels, which is where we started the day. We started the day at a key level. I'm looking to get short at this key level, period, point blank, right? So the ranges that we needed to identify was the overnight range and the PM range from yesterday. After this huge gap up, we never came back to the PM session range, so this became irrelevant. And usually you'll see like a green box or something down here. I just refuse to believe that the market was coming all the way back down here. So that's why I really didn't have a bullish plan from the lows, right? But the overnight session range was going to be my target if we were going to trade up higher. I was looking to come down to this level here, right, for the shorts. Okay, that range, the high was 18,944.50 through 18,865.75. The low 18,710 through 18,624. These ranges, if you guys are interested, again, I'm not a salesperson whatsoever, but if you're interested in what I'm talking about, we call this area here our chessboards. These two boxes, I call them my chessboards. Something I made up to help explain price action to my wife. If you guys are interested in learning what that is, the Discord link is in the description. Join, don't join. Like, I'm really just out here sharing my journey. If you guys want to rock with me, it's $40 a month. That's it. But if you don't, it's cool. I will put this information out for free. All right. Bearish, I'm looking to short week rallies into DVI, daily volume imbalance at 18,809 through 19,141.50. I want to look to target the bottom of the range, the previous day high, right? And then the daily fib. I forgot the top of the range, right? So essentially, I want to target the red box, the green box, and then the yellow line here at the previous day high, okay? Man, my other area I was looking for shorts is if the market came back or came all the way up here, which it did not. It kind of ran out of steam right up at these highs. So let's get a little closer to price and I'll kind of break down. That was my pre-market plan. I did follow my plan. Like I said, I ended up taking five trades inside of this range, right? But every single one of them, I call out in the Discord. I trade live every day, right? Inside of the Discord, I don't share my screen, right? Because I still feel like I want to be a little personable, but every time I enter a trade, right, I tell the Discord members that I'm entering the trade, and then I post the trade, a screenshot of the trade inside of the Discord, right? Like, I'm not a fan of sharing my screen for two reasons. One, I think it's an intimate process of trading. Two, I feel like people, if they only know you're going to share your screen, they're not going to be interested in learning. And I want to take people along the journey with me and learn with me. I don't want to have a Discord where you just follow every single thing I do. I want you to have your own brain. Anyway, where did I get chopped up in? Well, this was pretty freaking simple. Like, I'm pretty sure anybody that was trading inside of 930 to about 1010, you were probably in the same boat with me, because this candle right here, this guy right here, this 937 candle, and if you were trading today, you know exactly what I'm talking about. That 937 candle was a doozy, right? Like, and I don't even use words like that, but it was crazy. I was in the shorts here, right? Inside at 934. I was in the shorts. I added to the position when we came. I got short here. I added up here, and then it started melting. I was in profit. I was only in 5 micros total. I took 3 contracts off right here. I didn't even think I got filled, right, on the market order, because the market rallied so aggressively that it gave me, like, I got stopped out of the 2 micros, but I got slipped out of the 2 micros when I went back and looked at it, to the point where it basically, like, it didn't negate the W, but it dug into the profits of the W. So then the market kind of balanced out here. I ended up trying to short this entire trend up here. Like, it's a bad idea. I should have just allowed the market to sweep. It did sweep, and I got back in. This was like my 3rd trade. The market came down, pulled back, and I was like, okay, I'm willing to hold through this. And then this candle happened and took me out again. I was like, yo, what the hell, right? So then we trade up again. I said, all right, guys, I'm going to try it one more time, or I'm going to try it again up here. I tried it again at 19,065. Market came double bottom. I took some profit, came and took me out of the high again, right? Like, this was painful. Like, it was painful. But again, my risk was managed every single time. I was only in 2 to 3 micros up in these highs, right? Like, it wasn't killing me. It was just, if anything, killing your pride, right? But once I look at my pre-market plan, I said, okay, last place I'm looking is 19,141. If we get above this, then we're just going all the way back up, right? So we swept it, and then we got the same signal, right? Back signal, right? And I took it right at 19,140, right? Like, right at 19,140. I put my stops above the high. I was risking 26 point, and as you can see, like, I barely had any. I don't even think I had drawdown on the trade, to be honest, right? I took it right at 19,140. Trade pushed down, and I knew it was a kill count. Like, I was like, oh yeah, we're good. My target was midnight, right? Like, I was looking to get back to midnight, which is this red line here. But unfortunately, as you'll see when I go over the other instruments, there was a huge divergence in strength today between the NASDAQ, ES, and Dow Jones. The NASDAQ was actually stronger. As you can see, we were able to trade all the way up into the volume imbalance, where the other two instruments only either didn't make it to the volume imbalance or barely made it to the volume imbalance. And they both swept midnight to the downside because they didn't go up as far, right? So when I saw that, I started to just trail. I ended up locking in 306 points, which more than covers all the losses that I took over here. The thing about me and my trading, as I mature as a trader, I really don't care about losses anymore. Like I'm very numb to them. So like when I'm not afraid to tell people I took 4 trades up here and got smoked. Like, I mean, I'm a reversal trader. Sometimes I'm not going to get it right. Sometimes I misread price action. It happens. But then most importantly, I manage my risk, right? So I was able to stay in the game. I caught a very nice trade at what I would deem to be the reversal point, and I rode it all the way down to about here, right, for 306 points. I ended up getting stopped out. I think I got stopped out by this little movement here. But anyway, the market traded down a little further, right, and it wanted to go to midnight. It was just sniffing midnight, and it just wouldn't do it. Then we ended up reversing back up for PM session, right, inside of 130, and then ended up kind of just balancing out for the rest of the day. So NASDAQ ultimately followed the pre-market plan to the nose. We were looking for this DVI to cause a rejection. It did just that. It wasn't able to get back to midnight, which tells me that the bulls are probably still in control of this for now, right? Maybe we get a big dump at the end of the day, but I mean, this balance out equation here, something's got to give. I don't know what's it going to be, but something's got to give. Either we're going to go up or, start to push down. But after that, I didn't take any more trades. I went for my walk and I was chilling. So on the Dow Jones, right, moving back over to the Dow Jones, this is what I was talking about, right? When I was saying that there was a huge divergence. Notice we got that same DVI, that daily volume imbalance on the Dow. Now, if I was trading this today, my plan, it would have been simple. It would have been the same thing. I would have actually been looking to short the market, not go long off this break and retest, because I would have wanted the market to come back down to midnight. So on this rally up, I actually would have won this trade if I took it on the Dow, right? Like if I took this trade on the Dow Jones, I would have never even been stopped out. Like I would have just been sitting here taking the same trade because I would have taken it right here off this 10 o'clock candle, right? I would have drawn my box here, right? And, once I see these doji candles, I love them, right? I adore these doji candles when they're at the top of my trend, right? Like I love it. It's like a green flag for me. As soon as I see this, I'm like, oh, doji candle at the top of trend. We tapped into the liquidity. That's game time. We come back up here. We break the structure. We come back up. Boom. I'm short 1035. Basically the same time, but you see how it didn't the NQ candle at 10 o'clock. It ran this candle, right? It ran this candle and stopped me out. On the Dow, it never ran the candle and it went straight to midnight, right? Like it's one of the reasons why I love the Dow Jones structurally. I trade everything, right? So it doesn't really matter to me, but that's just the difference. If I was trading the Dow, I would have just took less losses today, right? Maybe another day the Dow will be stronger than the NASDAQ. So you just never know which one is going to be. But this is the divergence that I was talking about. You can see on the Dow, we went straight down. We got to the New York AM session. I would have held through this, no problem. We came down, boom, and I would have hit my profit target straight to midnight, right? As far as the structure goes, I mean, it was quite simple, right? We were expecting the market from the lows. We got this huge gap up. We balanced out, right? We were making higher highs and higher lows the whole way up. So of course, I anticipated the market tapping into the next liquidity, right? But where's the next liquidity, right? If we just zoom out, right, and go to the daily, time is fractal. You can see this on the daily. You can see it on the 1 minute. You see it, whatever, right? People will say we're in an uptrend. I beg to differ. The market is in a mother-loving downtrend, and it's aggressive, right? And now we're ranging at the low of a downtrend. How many times have you seen that inside of the lower time frames right now? Where every time we get to the lows, we consolidate and we dip and go lower. Well, we're doing that, but on the higher time frame. We're at the low of the downtrend right now. This was the all-time high. We're at the low of the downtrend and we're consolidating at the lows. That is not a good thing, right? That is not good. The market needs to make a new high. And if it doesn't, it's going to continue to trap people inside of this range. And when it finally gets enough people trapped or whatever it is it's trying to do, it's going to deliver a new low, right? That's what the market's trying to do, okay? But anyway, we came down. And so structurally, what we were looking for, right? If you guys are following, if you take this little red box right here, right? The second the low of this box broke these lows right here, right? You can see it on the 1 minute a little better. So let me come down there, right? Right there, right there. The second this high brought a new low, it got below this low. This was the last low that was made, right? This low right here was the last low that made a new high, or this low here, whichever one. Once the market got below this low right here, it was ball game for me. It was the new trend set, right? We broke the lows and then we came up and swept the highs. That's when you know the trend is shifted. The order flow has shifted, right? You can expand the candles. You can see it a little better. The order flow has shifted. This is where I'm taking the short right here, right? You could even bring this box up and use that wick, right? It's kind of like the same thesis, right? We break the low of the data wick right here at 300. We come back up into 50% of that wick, right? The CE or whatever. We come back and we make a lower high. You can even get it here. You can wait, get it here. Either way it go. Beautiful trade entries up there, straight down to midnight, right to the bottom of our chessboard, which represents the PM session low on the money, right? If I was writing a pre-market plan for this, this would have been in my exact plan. Look to short DVI up here, target TOR, top of the range, the bottom of the range, and then midnight price, and then potentially the previous day high, which they looking kind of weak. They might actually close this gap and go to the previous day high. We'll see what they're doing because the market's still open as I'm filming this. All right, moving over to the S&P 500. Remember, I told you the NASDAQ was the stronger instrument. Look how far, right? This is the 4-hour DVI on the, or the daily DVI, or the daily volume imbalance on the S&P. Look, we're nowhere near it on the S&P, nowhere near it, right? So the S&P closed this DVI, but it has another one up here and it was nowhere near it, right? That's just telling you like there's the strength is in the NASDAQ right now, but it's also going to take, it's going to take its cue from the rest of the market. Like the NASDAQ is not just going to keep flying and the rest of the market just dumping, right? So ultimately everybody's on the same wavelength, right? But the markets, other instruments are just stronger, like the NASDAQ, it's all tech, right? So the same setup, right? Like I hate to beat a dead horse, but it's the same setup. Right? We come over here to the Dow Jones. I mean, the S&P 500, you draw the same box, right? Come down to the 1 minute, right? You look inside of that 1 minute time frame and you can see clear break of structure, broke through the data low, right? Came back up, ran the high, which is exactly what you wanted. Again, if I'd have taken this trade on any other instrument besides the NASDAQ today, I would have never even lost the trade, right? But it's all good. Like it was my instrument of choice. I'm not tripping. I'm just making a point. We started making lower highs, right? Lower highs, lower highs. You enter this right on these lower highs, right? And you target the top of the range, right? You target the low of the range, and then you go and target midnight, right? Weekly settlements right here. Like this is a beautiful target, right? I think the market's not done. I think we could still go to previous day high, get below the weekly fib, all that good stuff. I think today was just another trap set by the bears, in my opinion, right? Like the bulls are not in control, guys. I don't know how many times I gotta say it, right? Like the bulls are not in control until they put in a new high, and that's a swing high, right? I'm gonna say it again for the people in the back. A swing high, right? The market needs to make a new swing high, right? This 10% candle got above this high, this high, this high, but this is the swing right here. And it still can go there. I'm not saying it can't. I'm just saying it can still go there, but until it does that, the market is bearish, right? We're consolidating at the lows of a range. That is a very bad sign. If they do not make a new high down here, that means that they're trying to take it back down. So we'll see what happens. But that is my breakdown on the S&P, Dow Jones, and the NASDAQ. And let me show you some things that led me to believe that I was on the right path. We move over to the volatility index. If you don't know what the volatility index is, this is an instrument that follows the options chains of the option chain of the S&P 500, right? Not the futures, but the SPX and the S&P 500, okay? Directly. It is a direct correlation. Let me explain what direct means. That means that if the option chain is bearish, the VIX will be bullish. If the option chain is more bullish, then the VIX will be bearish. That is a direct correlation. It will never change, right? That's why they call it the fear and greed index, because options are a sign of fear and greed. If people are buying calls, they're greedy. If they're buying puts, they're in fear. That's why they call the VIX the fear and greed index. And no, it is not some type of chart that's maybe right. No, no, Whatever the S&P 500 does, the VIX will correlate and do the opposite. Now, the speed in which it does it will change based on the amount of volume coming into the option change that day. That's the only difference, right? Obviously, there's going to be more speed if we're selling aggressively because the VIX will continue to rise faster. You can read it on lower time frames. But essentially, if I was a betting man and I wanted the market to go down, then guess what I wanted the VIX to do? I wanted the VIX to come to a key level. Remember this from Tuesday, April 15th? Remember this from April 9th, Wednesday? I would want the VIX to come to a key level after making a new high. Remember the new high it made on Monday, right? I would want it to come down here and find buyers, right? And then go and make a new high, close the gap, come back down here and retest these lows. That's exactly what the VIX did on the 1 hour chart, right? If you were to just draw a box right here, right? On the 1 hour chart, this is essentially 1 hour demand. Now the VIX still got some work to do because it too needs to make a new swing high in order for me to believe that we're out of the downtrend, but we're starting to go back up. So when it came up to the weekly fib and rejected, that's a sign that you probably should get out of your trade because the market is now back in balance. Hence the consolidation that we're getting right now. So I wanted to give you guys an idea of the reasons why I was still continuing to look to be a bear, right? Because the VIX was telling me that it was ready for a move to the upside. That being said, those are my thoughts on the Dow Jones, the S&P 500, the NASDAQ, and the volatility index. I also took gold. I also took trades on gold. I'm not going to go over them, but if you guys are interested in hearing more about my gold thesis, go ahead and hit the like, subscribe, join the Discord, hit me up on Twitter. That shit's free. The Discord is not, right? But this is my journey. My job as a trader is to continue to get better every single day. And I haven't reached my peak, but I'm definitely on my way there. And I would love to share my journey with you, share the education that I've made or that I've gained over the years of trading the last 3 years. And if you guys are interested in that, the link to the description of the Discord is in the description down below, and it is $40 a month. That being said, my name is T Hobbs. This is the Trader Shop, and I'll catch you guys on the next one, man. Peace.